After a bit of a rally moving into Friday, we kind of hit a ceiling. Let's see where the market's going this week. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our weekly market recap webinar. My name is Chris. I'm part of Riz International, and we are a group of traders who are looking to further our knowledge in the markets and make sure that we're making our money work for us and not the other way around. If you are watching us on YouTube, I would ask if you take just a second down there, click that like and subscribe button, leave a comment, click the bell icon so you get notified every time we upload new content on the channel. It really helps as we are trying to reach more and more traders to help them become better in the market. And it's been an interesting couple weeks because honestly, we've really just been consolidating sideways. Now, it does look like we kind of broke out of this rut a little bit. Previously we had been kind of bouncing off of 41.86, but now we kind of pushed over it. But we came right up to that 4,200 level and had a very nice rejection there on Friday. So that's not very confidence inspiring, but it was a pretty big Wednesday and Thursday, definitely a nice big run on those couple days, but we still are stuck between 4,100 and 4,200 at this point. Until we see a move like this through 4,200, we're still not looking to jump in just yet because there is the potential for downside. Now, I did use the word ceiling for a reason. I'm not sure if you caught that in my little intro, but probably the biggest thing coming up this week is the debt ceiling discussion. Now, Riz gave a very in-depth discussion about the debt ceiling last week. I'm not going to rehash what he said, but if you haven't, make sure you go check out last week's webinar because, we really went into detail on that. But the thing is, this happens all the time. I can't count how many times that they've been playing with the debt ceiling. It's like, oh, we're going to shut down the government. Oh, we're going to do this. And there's only so much political, stuff you can handle. And I'm not trying to get political. I'm not talking about either side being right or wrong, but both sides of the aisle really like to weaponize this debt ceiling. And kind of point the finger. It's kind of like the Spider-Man meme, if you know what I'm talking about. It's like, oh, we're not doing it, you're doing it. No, you're doing it, we're not doing it. And it's just this dog and pony show that we have to go through all the time. And honestly, I think that's what's really stalled the market out because everybody's in a wait and see mentality right now. So, if I had to bet on Monday, I think we'll probably see a little bit more red. We'll kind of come back down. Here, I can draw that for you. I think we're going to kind of do like one of these and maybe, we tap up here on 42 again, and maybe we push a little higher. But I think we're just going to kind of stay in this channel for a while, honestly, because we're just all kind of waiting. It's hard to say, for a lot of people, oh yeah, now it's time to go risk on, because if there is a default on the debt and, the U.S. defaults on some of its loan payments, that's obviously going to be very bad for the market. That will negatively impact the market quite a bit. So I think a lot of the whales right now are really just waiting to see what happens before they go ahead and put their capital in the market. As Riz has talked about, he's been primarily in cash for quite some time. That doesn't mean that we're not trading, but it means that we're going in a bit smaller right now because we don't want to, go in too hard and then have the market go the opposite direction. So our, advice right now is we got to wait for this debt ceiling thing to get taken care of. If that happens and everybody's happy and things are looking good, we could see a push through 4,200. I think that's a fair, expectation. However, if we don't and they do default on it, I have a hard time believing that they would actually do that. But you never know, is all I'm going to say at this point. Anything is possible. But if they do default on the debt ceiling and there are liabilities that are not being paid for the government, we will see downside. I'll tell you that right now. We will see a pretty big hit if that happens. But there's been talk that there might be a vote next week in the House, but still, for the most part, debt ceiling talks have stalled, and that's going to weigh heavily on the market going into next week. Taking a look at the breakdown here for the S&P 500, it's kind of more of the same. Again, check out last week's webinar if you missed it. But tech and communications really just flying high, propping the market up. Consumer discretionary also still pretty high, up 18% on the year, and that's really holding the S&P 500 where it's at right now, around close to plus 9% on the year. We've got consumer staples here above the zero line, but everything else is down below it. So, really like what we talked about. If tech and communications takes a hit here over the next couple weeks, we will see the market go with it, because that's really what's propping it up at this point. We've been calling for more downside this year, based on all of the economic indicators and things like that. It's not an unfair expectation to see some more downside, but we really haven't gotten it. We really haven't gotten that push towards, at this point, I'd be happy to see a push below 4,100, as things go. But we just haven't gotten that this year. And really what's holding us up? Tech and communications, really propping up the market now, up 27 and 26% respectively, and really just kind of steamrolling everything. Taking a look at the asset classes here, oil didn't do much of anything this week. I'm going to go ahead and take these lines off. I don't think we really need those anymore. Really kind of pushed down here to this 71 area. Let's see, where did we close on Friday? Looks like we closed at 71.69 per barrel for crude. And we really have just been in this, this up and down with oil. And I'm a little surprised that we haven't seen oil to start peaking up a little bit, especially going into the summer months here. But perhaps people are not looking to travel at this point, and we may not see that increase in demand in the summer like we usually do. But oil really just kind of doing its thing. I really wish that it would come down at the pump. I'm sure that everybody would prefer that. I've noticed it going up at the pump here a little bit lately, but as far as actual crude oil price, really stable for the most part. Really just kind of bouncing around between this 83 and 68 area. So we really haven't seen a lot of movement in there. No trade still. And then gold took a massive hit this week, really kind of plunging back down. And we are down below 2,000 again. So that was an interesting, time there. We had this huge run up in gold with the banking crisis. We spiked up to this new, or actually not a new high. We got close to the old time high. Really, really close, but didn't quite get there. Didn't breach 2050, and a pretty hard rejection down below 2,000 again, though we did have a bit of a rebound Friday coming off of this 1967 support area that has been pretty reasonable, has been holding up pretty solid. So gold's still way overvalued in our opinion, but it is what it is. We're not trading gold at this time, and it's because it's so flippin' expensive. It really just isn't worth it. See a little bit of a peak up here in the Treasury bond yields going into the end of the week, and we kind of see that mirroring the market, as the market kind of bounced up nice and high, the interest rates kind of came with it, and so did the dollar for that point. I love listening to, all of these different pundits on social media and things like that that say the dollar's crashing. It's never been lower, but, we bounced off this week and gained strength. So, while gold actually lost quite a bit of strength. So everybody who's saying that the dollar is crashing, I'm not seeing it. I'm not sure what you're looking at, but I sure can say that dollar's looking okay right now. I think we're holding just fine. It's probably right about where they want it, honestly, and it's been holding that 100 to 102 area pretty well. And bonds just peaking up a little bit here going into Friday. Let's go ahead and take a look at the key dates this week for the market, and not a whole lot going on. Looks like for the first half of the week, we've got nothing. And then, for the second half of the week, we have some smaller announcements. We have the FOMC minutes on Wednesday. That should be interesting to see how that pushes the market one direction or another. And then we do have some interesting things here. And one of the things that I thought was most interesting was this huge disparity on durable goods orders month on month. Last month, it was 3.2%. They're expecting a negative 1% in that this month. So a huge move there. So that was a little interesting, something to keep an eye on for Friday. Core PCE price index month on month is another good one to keep an eye on, though they are expecting it to stay stable, which is not a bad thing. Personal spending, they're thinking is perking up, probably because we're moving into the summer. and they're saying that personal income is increasing. I don't know where they're getting that number because my personal income hasn't increased, but if yours has, well, congratulations. Now is the time, if you have some questions for everybody in the chat, if you want to go ahead and post those in there, I would love to answer your questions for you. I know that I typically go through this a little bit faster than when Riz is here. That's because I value your time. I know that you're coming out here on a weekend. I really appreciate it. And I want to make sure that you get all of the information as far as what we're watching this week. And really, it's the debt ceiling. That's what we're watching. We're watching to see what happens, with the prospective vote here. If something happens this week, if it doesn't, and how that will affect the market. If there's still more stalling, more gerrymandering here and there, and we're going to do this, we're going to do that, then I think we'll see this stagnation in the market continue, honestly. I think we may kind of dip back down into this 4150 area and kind of trade sideways like we were before. It's really frustrating. It's difficult to trade, but when you have a huge catalyst looming that can go either direction, it is something that will weigh the market down quite a bit. And that's what we've seen here basically since the beginning of April. Really just kind of, we had a couple big spurts up and then we spurt back down and then we just kind of trade sideways for a bit. All right, Sankheat wants to know, is it good to take a put on NVIDIA since it's so high without making any sense? Okay, well, let's take a look at NVIDIA. And yes, this one has been going absolutely bonkers as of late. I know, if I'm not mistaken, Riz is short on NVIDIA, and all I can say is AI, AI, AI. Whenever they start talking AI, NVIDIA just likes to spike. However, that being said, let's see, when is earnings coming up? Earnings is coming up on Wednesday. That will be a massive catalyst. So taking a put prior to earnings, if you're trying to do like a weekly or something like that, that's a freaking lottery ticket, bro. It's a coin flip. It could go either way. Earnings could be great and it could tank, especially if guidance isn't very good. So honestly, if you're wanting to take a put on this, make sure you're okay with it going to zero. That's all I'm going to say. I agree that NVIDIA is way too high at this point. It went way too high too fast. A correction is needed. We got a bit of one on Friday. Not exactly what we were hoping for. We kind of wanted a bit more of a correction. But that earnings catalyst on Wednesday is going to be huge. So that's a big danger to your put. Now, it could tank prior to earnings. That does happen sometimes if they are expecting earnings not to be as good as they think, or that investor sentiment will look sour based on the earnings results. But if it continues to run, and these things can do that, even though NVIDIA is a massive company, huge tech company, chip maker, GPU maker, we are approaching that overbought area, but I will say they can be overbought and stay overbought for some time. And so this, taking a put here is really kind of stepping in front of the freight train and seeing who's going to move first. Could be either one. It could sell off here going into earnings. But all I'm going to say is if you want to do that, be very careful, or just only wager what you're willing to lose, because this could go either direction. And I'm not sure I would personally want to jump in front of this. It could be very profitable for you if it turns out your direction and it tanks like we're expecting it to, but it could completely go to zero as well, especially with the earnings catalyst. If earnings are good and everything's looking great for NVIDIA, I think it'll continue to run. That'll be a huge catalyst for it. And it's one of those things where sometimes stocks move erratically and without making any type of sense at all. And right now, that's what's happening with NVIDIA. It's all of the AI hype that's really going on. And it's basically riding that train north at this point. So you could take a put if you don't want to actually go short on it, and you're willing to lose that premium, then I'd be okay with it. But man, with earnings on Wednesday, I don't know, man. Me personally, I'd pass. I would wait until after earnings. That being said, you could miss the move, but you could also save yourself your premium on that put option. So that's a tough call. If it was me doing it, I wouldn't do it, if that helps. But I do see what you're looking at, and it makes sense to me. Okay, Jeff says he's considering a position in Adobe, but he thinks he might have missed the move. Well, I can understand why you might think that. And yeah, that has definitely been quite a big move up on Adobe here. And looks like, what do we got? Earnings, yeah, next month. Yeah, 15th of June. So no rush on earnings here. Obviously, Adobe spiking up very nicely here. What is the deal with this? Okay, whatever. There's really not much help in those news stories. But yeah, Adobe's on a pretty nice spike here over the last couple days. A nice double bottom pattern, honestly. You can see the W right here. So really, really nice. I think, with Adobe, I wouldn't mind holding it longer, honestly. It's been considerably higher back in the day. It seems to like to double bottom quite a bit, actually. Even if you get in here, you might be able to push it up at about 10 points. So I don't totally hate a long position in Adobe, even though it's really been running kind of hot right now. We're not even close to overbought. I think you could easily get 10 points on it, if not more. So, yeah, Jeff, I don't hate it. And again, especially Adobe, really solid company. You're not going to have any problems holding this long term, in my opinion. Even if it does go back down. So maybe go into a little bit smaller position. And if you do get that continued push up and, your profits are decent, go maybe take it off. If you get a pullback, then you've got room to average down if you need to. So that's kind of where I would do it. But yeah, I kind of like this. I think it's pretty beat down as of late. And finally, it looks like it might start to rally a little bit with all the other tech sectors. So thumbs up from me, Jeff, if that's your thing. Of course, I'm not the one taking the trade. You have to take it. And of course, I'm not trying to give financial advice to anybody, just my opinion. But yeah, I like Adobe long a lot better than I like NVIDIA short. Yeah, for sure. No problem. Always a pleasure, guys. All right, well, I'm not seeing any other questions coming in right now, so I wanted to go ahead and thank everybody for coming out. It is always awesome to have everybody here live. Like I said, I value your time, so I don't want to keep you any longer. I like to try and keep these shorter so that you can get back to your weekend and we can start getting ready for the market, because I think it's going to be an interesting week, to say the least. So for all of our elite members, we'll see you in chat. And for everybody else, we'll see you in the market on Monday.